right, enough of that, enough of that. We've got business to tend to. Let's see, arrange these mics here. All right. How you doing, friends? Currently, I am upstaging right now Jerome Powell, taking all his shine away. He's talking right now after the Fed has just raised the Federal Reserve short-term rate by 75 basis points. There was some chance, a small chance, that they would go to 100 points. In fact, there are members of the FOMC that did vote on a 100 basis point hike. He's giving easy answers to softball questions right now, which is, doing pretty much what we expected. And I had actually recommended a trade earlier as just sort of a speculative thing. I thought that we would end up right where we started, and it looks like that's what's going to happen. I wouldn't even be surprised if we ended up a little higher today, even though this 75 basis point hike is going to severely affect the economy down the road. Plus, they're talking about another 125 to another 150 basis points following on to this, to stem inflation. Of course, they are still under the delusion that they can bring inflation down to their target of 2%, blah, 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 and all that other stuff. But, to start off with, they basically, lied about why we are in this situation in the first place, and blaming it all on, the usual suspects, and without taking any blame for themselves, when they are, and the government with their spending is the number one reason, and their policies, their energy policies, is the number one reason why we are in the situation we are in now. And quite frankly, this has been building for more than a decade, maybe 2 decades. And so sooner or later, the price has to be paid. Now, will that happen this year or next year? Nobody knows. So anyways, that doesn't really affect anything that we're doing here at 0DTE. And it's interesting to look at this long-term outlook. But it's probably not useful. It's not useful from a trader's point of view to watch this and get all upset saying, man, you're lying, or no, that's not the way it happened, or what the hell are you saying? None of that stuff is useful or helpful to what you do day to day. As a matter of fact, all it is really a distraction. And, it causes us all to get into this state of mind where we think we know what's right, or what the real reason for something is, or or the way things are going. And it really doesn't matter, because no matter what the real cause is, or no matter how we got here or where we're going, the current price of the market is the truth, right? So whether you agree with it or not. And the question remains, do you want to be right, or do you want to make money? I choose the latter. I want to make money, and I want to make a lot of money. And I want to make it as efficiently as possible. And that's actually what this episode of The Final Trade is all about. It's all about how I put on trades that are 30 times more efficient than other 0DTE services, and quite frankly, just about any other high probability trading strategy that's out there. And so I wanted to explain that. But before I did, there was a question in my service about how I actually came up with the strategy in the first place. And this goes right to this whole point about why what we're doing is 30 times more efficient than other strategies. So I've been trading the final days of expiration of options for as long as weekly options have been around. As a matter of fact, that was one of the very first things that I recognized that there was an edge, and that was when Apple, I think, was one of the very first companies that came out with weekly options. And of course, this was a long time ago. And I had started a service at the time called the over the weekend trade. As a matter of fact, it was all designed around doing these weekly options. So I've known about the power of the decaying premium on those final days, and the edge that you had. And then when I learned or started looking around and seeing other services that were, I'm talking about more recently in the past few years, that were trading the final day of expiration, 0 DTE, on the S&P, I thought, oh, that's interesting. I can get into that, and I've been trading that on and off. I'd like to see how they're doing it. And so I joined a few services, and the way they were doing it wasn't anything like what I had ever been involved with, or from I've been an institutional trader. So as an institutional trader or a hedge fund manager, it just seems so retail to me, right? Hey, let's see if we can capture that dopamine effect and do really high probability trades, and we'll put on super wide spreads and make ourselves feel good. Who cares about the risk? So anyways, I joined this one service, and that's what they did. They had this basic strategy that was being touted by a number of people, that everyone seemed to fall in love with this one strategy: super wide iron condors, putting on things with like a 5 delta, and then taking that high probability trade, and because of the incredible gamma risk and incredible risk on either side, sometimes as much as 10 times the profit that you were going after, actually sometimes 20 times, they would put stops on in an options trade. And I thought, who in the world puts stops on in an option trade? Options are by definition a way to define your risk. So why would you put stops on? That makes no sense. Why would you get out of a trade, force a loss, when that trade has a natural bottom to it, and you could potentially come back if you hit that bottom? Once you hit the stop, it's done. You've lost. And so I went into this service, and I couldn't understand why they were putting up $1,000 to make $50, and that is if they everything went just right. And so I said, hey, there's a better way. And so I started introducing what I call the inversion of risk to the group, and lots of members started getting excited about it, because instead of coming back with $50, $25 wins and $50 wins using $1,000, I was showing how you could use $100 or $150 and make $500 wins, $750 wins. And so all these people started saying, wow, this is really cool. And the owner of the group got pissed off at me and kicked me out. So I decided to start my own service. That's what this is today. So I took that and said, fine, you don't want to listen to me. You don't want to do it a way that actually has a positive expectancy, that is much more capital efficient. In fact, the way I was doing it was literally 30 times more efficient than what they were doing it. I was using 30 times less money to make an equivalent amount of money. Now, I don't know about you, but man, if I could, say, buy a car for 30 times less money, or buy a house for 30 times less money, or buy food for 30 times less money, you damn well bet that that's exactly what I'm going to do. So why wouldn't I do that with trading, right? Why wouldn't I take my hard-earned money, the money that represents the value that and the work and the effort that I've put in and accumulated and transferred it into this sort of monetary stronghold? Why would I take that thing that I have reverence for, and just throw it away? Throw it away, literally throw it away, or misuse it. I just can't understand it. So that's why I started the service. That's why I started this service. So I started showing people these trades, and a bunch of people from that service are now members of this service. And then that's how 0 DTE was born. I had to put the dash in there to differentiate me from the other service. So it's 0-DTE.com. So we've been doing that now for about a year and a half, and we've grown to about 750 members. Things are going great. Now I wanted to say that just recently, I've started a new thing for people who want to try out the service without getting fully involved, or another way to do a trial of the service, and that's actually right below here. You'll see somewhere below there, like right down there, there's a join button, and that goes through YouTube. And you can take part of this one portion or subpart of the service where I do a live stream every day for members between 10:30 and noon, where that's the time where we're most likely to take a trade. So you can join that, or you can do our normal trial. Either way will get you involved in what we're doing and see the efficacy, the power in putting on trades that are literally 30 times more cost efficient, more efficient than the other ways of doing 0-DTE. And so, a real simple example of this is just looking at the proof. I encourage you to go to the other site and take a look at their trade log, and then take a look at my trade log and look at the performance. And what you'll find over there is that after 2 years of trading, they've got a net result of about, let's say about $2,500, something like that. All right. Net result of $2,500 after doing these hundreds of trades. And with that $2,500, they had put to use more than, something incredible, something like $250,000 of margin. I mean, I'm talking cumulatively, right? In 2 months, now my log is about 3 months old, but in 2 months, I've received a little bit more in profit, about almost $3,000, but I only used $15,000 of margin cumulatively. In any one trade, I never used more than, say, $150, $200, where they're using $1,000 to go after 50. I'm using $150 to go after 1,000 or 1,100 or 1,200. So that's where I get this 30 times more efficient. I use 30 times less money to make an equivalent amount of money. But the real cool part is that not only do I use less money in every trade, but I'm going after an amount that they are not capable of going after. So as an example, the other day, just yesterday, we had a good trade on. I took mine off a little bit early, and I think my profit was about $250. I put up, I think, $170 to make that $250. Now, that same $250, the other group, if they were to, get that much, they would have had to put on nearly $3,000. So imagine that, $170 to make $250 or $3,000 to make $250. Which would you do? Which would you do? I mean, it's not a hard decision. I mean, it's kind of like a no-brainer. So anyways, that's what the inversion of risk is all about, and that's what we're doing here that sets us apart from virtually every other 0-DTE service that's out there. Now, I know that there are some other services I've seen recently that are now copying what we're doing, at least copying the concept. They don't do the full version of what we do in terms from analysis, process, all the way through execution. They just do some of the nuts and bolts criteria. So there are copycats out there now recognizing that this is what they do, but they don't have it fully baked in. So it's only a portion of their service, and they're copying my logo, everything. So that's kind of interesting. I guess you could say that's flattering. But if you want the real deal, it's right here. Now, in terms of doing a final hour trade today, that's something I'm not so sure about. Let's take a look at where the market is right now. Hold on. and to the charts. Okay, so we can see that since the Fed made their announcement, we've had a fair amount of volatility. The market has sort of ranged around 60 points from top to bottom, maybe even more than that. Let's see. Got as low as 33.30 and as high as, wow, 100 points, 39.25. So nearly 100 points of range. I believe Chairman Powell is still talking.
I think so. All of that's happening.
Yes, he is. Let's see. Is that true? Is he still talking? No, he's done. I had it on pause. So he's done. The market, basically we're ending up exactly where we started. So the market has really done nothing. I expect today's market to end up right about on this POC. As a matter of fact, I had put into our service earlier today that this is where I thought we would end up. Let's see if I can find that. Where is it? No, that's yesterday. Today. Let's see. I said, Well, I didn't put an actual trade out there. It was more of a statement that I said, I think we're going to end up exactly where we started. But anyways, I think that's probably a good, probably a good call. But right now we're down a little bit lower than that. So that would be my call for today. Right on this POC, probably around 38.90 would probably be a good guess of where we're going to end up. I mean, it's 3:21. We still have another 40 minutes to go. Let's see if we can bring in some more data here and see where that POC is. Yeah, that's the POC right there. 38.90. That's where I think we're going to end up. Yep. Because really nothing's changed. I mean, we don't really know anything more right now than we knew earlier today. And I know that everybody was waiting for the Fed to say something, and I guess the big wait or the big reveal was whether or not they were going to do 100 basis points or not, and they didn't. So the 75 basis points was already factored in. Now the question is, was the pricing that we had prior to today valid or not? Is that where the market is finding value right now? Is that where we're supposed to be? Or is it somewhere else? Has anything materially changed today? The economic reports didn't show anything. It looked like futures were good this morning, so I don't see any reason why we don't end up right on that POC today. That seems to be the standard for what we've followed through with the past few days. So I'm just going to say it right out, and that's probably where we're going to end up at 38.90. All right, so 38.90. Let's see. I think I may have put on a trade earlier, a tiny little trade at 3,900. Let's put one on at I don't know, 38.80. Would that be? Yeah, 38.80. Let's do that. Let's add a trade there. That's going to be my trade for the day, 38.80. We'll make that 10 wide. Will that overlap anything that I'm doing there? No, it doesn't touch it. It won't overlap anything because I'm at 30. Okay, that'd be good. Let's see what that looks like. Yeah, I like that. Let's see what kind of price we can get. Let's see. First of all, we'll let's put that into the chat. All right, for 60 cents. I don't know. Let's see. Can we get better than that? Let's try 50 cents. Let's see if we can get 50 cents. Can we do it? Or is the market going to dump on me? I don't know. So I'm trying to get 45 cents. Look, it's right there. It might go for a round number. Let's try that 50 cents. I'm willing to bet 50 cents. How about you? You willing to bet 50 cents? I'm willing to bet 50 cents. Let's see if we get filled. Hey, we get filled. All right, so 50 bucks to make how much? To make 1,000. To make $950. That's the bet. 50 bucks to make 950 bucks. Let's see if that that comes through. Now the market's drifting down right now, so that made getting into the bet a little bit easier. Let's see if let's see how the market responds. Sorry, but let's turn that ringer off. You think I'm buying tomorrow's? Oh, man. Is that what I did? All right. Let's do it over again. You're right. I bought tomorrow's. Thank you very much for pointing that out. All right, so let's see. What is today's POC? Where we're at now? Now the POC is the lower. Okay, so maybe this will end up being better. 38.75. Even that looks pretty far out there. Let's see, where are we? Yeah, 38, maybe 38.70. See, now that I'm taking a better look at this is the POC right there. All right, so I have a wild card trade on for tomorrow. We'll make this one 38.70, and we'll make it 10 wide and see what that gets us for 45 cents. But what is the leading leg on that? What's the probability of touch? Oh, it's only 41%. That's not good. That's too far away. We need to go a little closer. We need to go to 38.60. That's $1.15. And then 38.50 is a probability of touch of 64%. 65%. That's like minimal. We're pretty close. We only have about a 25 point expected move to the end of the market. That's a lot for half an hour. Oh, and the market keeps on dropping. Interesting. Yeah, sometimes you throw you mess up. I made a $70 mistake. uh, all right, let's say hello to the people online here. We have Will Do. How you doing, man? And Alan Sturbers showing up, and Milo Hoffman. Yes, there is only one Ernie. Thank you very much. So point of control again today. I mean, that's what I think. And right now, it looks like that point of control is at about 38.70. And Dan Smith is here. How you doing? Here's my errant trade. Don't pay any attention to that. Okay, so I threw away $60, not 70. How you doing? And he's the one that alerted me. Tim Dodds. All right, so Milo, he grabbed a single 3,900 20 wide when prices were down earlier, so hoping for 38.80. Yeah, I mean, look, the market's way down, so I got to come up with a good trade before the end of the day. Mwad, that's okay. No big loss. $60, I think I can handle it. Again, these are all experimental trades, so I'm not really putting a lot of capital into it. And who knows, maybe tomorrow that'll end up being a lottery ticket. So Jeff got in for 45 cents. How you doing? 1, 2, 3 Happy Street. And Mad M is here. Vadam, all right. And we have a new member, Skunk Funk. How you doing? All right. Man, we keep on going down. Now I'm really surprised. I am genuinely surprised why we're going down. I don't think there was anything that Powell said that was different from the narrative that has been laid down over the past couple of weeks. Yeah, the swings are crazy. Lance wants to know, will you consider an overnight trade after hours? Well, I guess my trade that I put on is after overnight now, the error. But, we used to trade that way. In the first year of the service, the first 9 months of the service, I traded exclusively the E-mini S&P futures. And that's because I'm a big futures fan. And I felt that there was an advantage to trading outside of market hours. And the only way you can do that is with the E-mini S&P. You can't do that with the SPX because although the index right now and options on it are available outside of normal market hours, hardly any brokers support that. So I know Thinkorswim doesn't, IB doesn't, Tastyworks doesn't, hardly anybody supports it. Maybe TradeStation might support it. So anyways, so I decided to go to just the SPX and take trades there because I discovered that, trading outside of market hours didn't have quite the allure I thought it had, even though I did very well with it last year. It seems that it's not, you're giving up too much expected move for that small gain in premium. And it makes a lot more sense to get a little bit closer to the fire and take trades in the late morning after volatility has worked its way up in the morning, get good pricing, and then take that into the close as IV starts to find some relief. So that's why we've switched over to SPX and why we don't do overnight trades anymore. That was a long and involved way of telling you, Lance, why we don't do overnight trades anymore. How you doing, Hans? Ernie, do you still trade futures? Yes, as a matter of fact, I do. I trade them every once in a while. As a matter of fact, last week most of my trades were futures trades. Let me see if I can show that. And we'll go to the log, and we can see right down here that Thursday all the way to Tuesday were all futures trades. Monday and Friday were SPX, and I didn't do too bad, and this is including the commissions. Now here's an interesting one, because commissions are so high on futures. Look at this guy right here. It was actually a winning trade, but because of commissions, it was a negative P&L. Look at that. I went in at 145, got out at 175, and it still cost me $6. So that's one of the problems with trading with the E-mini. You need to make at least $18 or $20 plus in your spread before you make $1. But given that, I still did okay. I made profit that week. All right. But there's no doubt that just trading the SPX with its commissions being anywhere from 1/3 to 1/6 that of the E-mini, it's a lot easier. And it's much bigger too. It's a much larger index. So overall, I would say that that's probably the better option. No pun intended. All right. So we'll go back here. Man, are we going to get into this trade? I don't know what's going on here. Is 38.70 still viable? I have 38.60. I might be able to go even a little bit closer, maybe go to 38.50. That's not bad. That's a good looking trade. Whoa, what is that? What was that distortion? I've never seen anything like that. Look at that. Oh, it must be some of these other things, yeah. Sometimes when you have some of these other older trades ticked off, they distort they distort your analysis. So let me see if I can turn those off. All right, so now there's no distortion. Yeah, I don't know. I'm looking at this and I'm thinking, man, why are we down here at the bottom, and why is that now the new area of value? I'm not, you can't dispute it. That's where the market wants to be, but is that where we're going to end up today? So far today, the market has spoken and said, hey, we like 38.70, but now it's looking like 38.50 or 38.40 is where the market likes to be. And there's only there's 23 minutes left in the market. I don't know. Maybe I go for 38.50 and go narrower. I am at 38.50 here. I can get in at 75 cents for 10 wide. That's pretty good. But it looks like the market still wants to go down. It looks like it's holding. Let's do see, it's consolidating. I went to 3 minutes. And that doesn't look like any kind of reversal pattern I've ever seen. That looks like a continuation pattern to go lower. Is that where we're going? Are we going lower? Is the market finally coming to the realization that no end of day YouTube? Oh. I got to tell people in the group that I'm online now. I think the market's now coming to the realization that these higher interest rates are ultimately going to bring the market down. If you look at historic put call ratios and where the market is right now, we're at pretty much the highest point we've ever been, ever, with the put call ratio. And every time we've come up to that kind of high point, it's always preceded a deep movement down or a recession. So I think the market now is coming to that realization. I think that the market is now waking up. The market is awoken. And look, we're coming down to this LVL. Maybe we'll get rejected there. Wow, this is really something. This is kind of like restoring my faith in the market. So this was my initial call that we would be going up, and in fact, we just about hit right where I said we were going to go this morning. This was my prediction for today that I make every morning. And we just about hit it. Wow, that's something. Of course, I didn't call the downside, so that shows you how much that's worth. We have to say hello. Hey, Victor, how you doing? Anybody else? Did I miss anybody? Travis, how you doing? Have you considered trading XSP and micro SPX? Well, the micro SPX. As a matter of fact, well, let's go back to my trade log, and you will see that I do have some XSP trades here. Here's one. Here's a couple. Here's one in August, right there. There's another one. And here's two more. So yeah, I traded 4 times. I traded the XSP, did okay with it. So, I have, just in case, I have all of these things lined up. The SPX, the ES, the mini or the micro ES, the SPY. Of course, I'm not going to trade the SPY. The XSP, and even the NASDAQ. That's the futures. I should also put the index in here, and that is a viable thing to trade. However, the liquidity is rather sparse there. So I don't know about the NASDAQ, but I have them all set up, ready to go. But mainly I've just traded the SPX, the E-mini, S&P, and a few XSPs. You got to try them all, see how they all fit into the equation. The XSP definitely is lacking in liquidity, so there's that, and it's a little bit more difficult to trade. But you can put on much wider spreads, and it costs much less. JC says your scenario error was before your newfound faith in the sensibility of the market. Yes. Hey, I didn't say that. Look, I didn't have the downward scenario, right? I just thought that after this rate hike that the market would just go up. Let's see. Did I miss any other questions? Opium supply all gone. Yep. All right. So that's it for the questions right now. Let's go back to the market and see what's going on here. Wow. Okay. So we have 17 minutes left, and we're down to this LVN. Now let's see what kind of implications this has from a longer point of view. Let's pull out a little bit and look at where the market is. And see how this is a kind of a significant move here, by the way. We're moving away from the T0. There's a number of LVLs before we get to T1. T1 is ground zero. We get to T1, the node that's below this, and this market is going down hard. Now, we're not anywhere near there yet, and it's going to take a little while. So let's pull back a little bit more and see where that is. See right there, there's see there's T1. Whoop. Right. This purple thing, that's the T1 node, which represents the low in this market, in the bear market. So let me color that in a little bit. We'll increase its color a little bit. That's too much. There we go. So we're on the way. You know, I mean, look at that. See, we're on the way. We have these LVLs to get through, these green lines. These are all resistance points. And so there's a little stair stepping we have to do. And then we have some child nodes here that may provide some level of resistance or support as well. So, but if we get to this, down below here, man, it is a free fall. That's the volume well 2. Volume well number 2. It is a deep, deep, dark abyss, because we get down here and we're going to much lower markets. We're talking 3,400 or lower. So that's what looks like is being initiated here. So that looks like what's the, quite frankly, that looks like the resolution. Look at that. So we had this strong bear market rally. Everyone thought, oh, that the bear market is over. We have this. We're going to new highs, blah, blah, blah. And then we had the retracement of it. And then we had this anticipation of a good Fed report or some pivoting narrative. And then the CPI just totally lambasted that and just destroyed that notion. And then, now we're here, we're consolidating, waiting for the Fed. We get the Fed. They give us basically what we expected, but maybe we were hoping for something different. And now we're moving down and I think we're on our way to T1. That's what I think. I think that that's what this is saying, folks. We have left the building on the T0 node. That was a very big node, very, very big node, very powerful node. Lots of value accumulated there. And now we're moving back down into the T1 territory. So if we go to like a daily chart, we can start seeing the impact of this. All right. See, there's T1. See how big T1 is? It's massive. And now we're getting down into this lower liquidity area. You can tell it's lower liquidity because there's less volume. And then so we have T1, which is, it's kind of a minor last resort type of node. Because after that, there's not much. It's like a free fall. We go down to the pandemic lows, which is much further back. We still have a ways to go to get to pandemic lows. Look at that. See, eventually getting down to T1 is the last resort. Once we get below T1, you see there's the big volume well number 2 here. That's what we're showing right here. Get to T1, past there, then to T2. T2, that's where the ultimate down point. See, a lot of people are thinking 3,400 would be the ultimate down point in this market, but no. No siree. The ultimate down point is much, much lower. It's way, way down here. We have to look at, from here, that represents, T2 represents the top prior to the pandemic lows. All of this is fake. All of this is just the Fed going nuts, just pumping. All of that's going to go away. That's what I think. It's all going to go away. We're going to get down to T2, and then we're going to grind our way down lower. And then once we get below here, it's good night, Irene. That's a long ways to go, admittedly. but I think we just took the first step. And that's what I think. I think we just took the first step. Let's zoom in on that area again. Yeah, look at that. We took the first step. All right, so I guess I didn't end up taking a trade. I took one for tomorrow, which doesn't look promising because it's way up here. So I guess I did take a trade. It's a kind of a throwaway. Threw away $60. All right. We have some more questions here. Would you ever take profits on the SPX fly with XSP flies using the PDT hack? Yeah, but see, I would have to that the XSP is a lot smaller, and I would really have to add quite a bit of number of contracts, and I'm not sure a better alternative would be to use the E-mini as a way to take it off, right? If you use the E-mini, then I could use that as the hack and either leave it on, or I could even take it off at the end of the market. Let's say we were set for a pin and there's 2 minutes left. I could take the E-mini off and not suffer any strikes against me, but still hedge that position right into the close, and then potentially get, if we were into a pin situation, potentially get the pin too. So I would rather use the E-mini as a way to offset the SPX if I wasn't going to use just an offsetted SPX trade. But I don't think I would use the XSP. Mostly because it has besides it being smaller, it has lower liquidity, and it might not be able to get the price that I want. At least with the E-mini, I can definitely get the price. All right, Lance is asking, after hours side question, why do Dems think they can scapegoat JP when Biden kept him on? I don't know. That's not a question for this forum. Sorry. Would you ever take profits on a 10-wide SPX fly with XSP flies using PDT hack? And I think I just answered that question. All right. Oh, because you asked it again, because I guess I didn't answer you fast enough, Multiscan. Sorry. Jeffrey, how you doing? Bought a 3800 10 wide for $1.15 about 25 minutes ago. So 3800. Wow. Maybe. It still has a little ways to go, but if you have some profit, I would take it, I think. We're too close to the end. Didn't, All right, there it is. That's a pretty big drop. Look at that. Look at that candle. Look at that candle. Let's see. Let's go to a 15 minutes and see how many legs down that was. 1, 2, 3. Yeah, and see, now we're stopping right at this LVN here. Stopping at this LVN, making a decision. We pierced through. We opened the door. Are we going to be let through? So that's quite a range for today. So it's 38.13 is the low, and 39.25. Wow, 112 points 112-point range today. Pretty cool. I still don't see a trade right now. This is a falling knife situation. This was completely unexpected by me. I did not see that coming. It really looked like, look at this. Look at this. Look at this. Down, up, down. Yes. Down, up, down, up, down. There you go. Spread that out a little bit more so you can see that. Let's go to a 5-minute, then it becomes a little bit more clear. Look at that. Let's go to a 3-minute. Oh, yeah. That's some nice late market action. Yeah, I agree, Diesel. Craziness. Crazy train. In the words of Ozzy Osbourne. Any thoughts on tomorrow morning, or is it too soon? I believe tomorrow morning will come at the same time. But no, I have no thoughts on tomorrow morning. I want to see the overnight action. A lot of these guys hang out in the Asian session and the European session, and let's see what that foretells. Milo says, I thought the hopium supplies were endless. So I think what this is saying here is that the market didn't, this is the way I interpret what has happened. But before I do that, let's see what Alan has to say. Alan, let's see. Alan says, I am with you, Ernie, on tomorrow's trade. When the guy said it was tomorrow, I heard the dreaded Phil Bell sound while I was in the process of canceling. Okay. That was a mistake. We all make mistakes. I don't know. How am I going to explain that $60 to my wife? All right. So now I'm going to do a little bit of analysis here. Let's think about this. Let's put on our, we're going to channel the Fed. Wah, wah, wah. Okay. Now I have to channel the traders that are channeling the Fed. That's the inverse of moi. All right. Let's figure this out. The market's going down because the Fed has not changed their position since the pain declaration came out by Jerome Powell. In other words, and we clearly saw Chairman Powell kind of skate by the issue when a reporter asked him about, what are your future rate hikes going to be? That they're shooting for another 125 basis points. Does that imply a 75, a 50, and a 25 basis point hike? So it's sort of tailing off. But before, when Jerome Powell was talking about pain, he was talking about keeping the pedal to the metal, 75 points or die, baby. 75, 75, 75, 75, 75. And we're going to keep that on even past 2%. We're going to just jam it to the floor. That's what I interpreted, and I think that's what the market interpreted by we need to experience some pain. Now, he didn't say anything to counter that today, right? And so what I'm thinking is that this movement up and down a bit was the processing and interpretation of what he's saying. And did he say anything different than the pain statement? Did he back off on pain, or did he just say pain is coming by an omission of any kind of reversal statement? That's what I'm thinking. I'm thinking the market now is thinking that pain is still on the plate. Pain is coming. So that means that he's going to keep the pedal to the metal and keep on pushing and pushing and pushing this market into recession, because the Fed ultimately believes that is the only answer to inflation right now. Now, all of this gobbledygook about what caused inflation, making it sound like it was all these transitory things like the pandemic and supply chains and the war and blah, blah, blah. But inflation has been building for decades. Inflation has been building dramatically for decades. Everything is overpriced. The whole market is probably 50% overpriced. And it's all because the Fed has been pumping hopium into the market. The market is now coming to that realization that they're not going to see hopium for a long, long time. All of those times, all those good times, those parties, they're over. They now have to reprice all of their equities. They need to reprice them, bring them down into line with what reality is. And that is now, and you got to remember this, we have all the mortgage-backed securities and the treasuries and all this other stuff that's sitting inside of the Fed's balance sheet that they now have to unwind. There's $9 trillion in there. $9 trillion. So they're going to unwind $9 trillion of value in the market. Where do you think that's going to go? Where is it going to go? I believe that's what the market is seeing right now. The market is seeing that they need to figure out over the next year or 2 years how to reprice the market minus $9 trillion. How do you do that? Is it possible? Is it possible without a soft landing? Forget soft landing. That's long gone. And even Jerome Powell said in his Pain statement, he had obliterated the idea of a soft landing. There's going to be no soft landing. There's going to be no pivot. There's going to be none of that. And that's what the market's realizing right now. That is why the market is free falling right now. It went through that LVL. It's going to go to the next LVL, and it's going to go through that one too. What do you think? Are you with me on this? Is that why the market has gone down the way it has? Is it because they've come to the realization that pain is still the name of the game? Pain. You're going to experience pain. What was Mr. T's name in that Rocky? Was it Rocky 3? Was it Clubber Lang? Yeah. Pain. Lots of pain. Huge pain. That's what is ahead. Pain. And pain basically means, what it means, this is what it means. So, and this is what I think the Fed is really alluding to. Yeah, Clubber Lang. But he's the one that said pain, right? That's what Rocky's going to experience. Well, that's what the market's going to experience is pain. Pain equates to jobs. Jobs, now I know this seems antithetical to everything that the Fed is about, but I believe they think that the only way to solve inflation and to ultimately save jobs is to kill jobs. Because if they can kill jobs, they can stem the demand. And so they really believe that it's still a demand problem. They believe that the market is still super hot, and the only way to get and cut down that super hot market is to cut the feet out from under the people who are creating the demand. But the truth is, and this is where I think that the Fed is wrong, there are two ways that you can create inflation. One is through excess demand, but the other, right, is through supply. So that's what I believe is going to happen. I believe pain is on order. And Matt says, I think that the CPI report really showed how little control the Fed has over fighting inflation with their number one tool, rate hikes. Oh, but they have all these other tools, Matt. You know, Jerome says we have all these tools at our disposal. That's their favorite word. We have tools. Tools to fight inflation. Like they have hammers and nails and crowbars and crap. They don't have any tools. The only tool they really have isn't even the rate hikes. It's their spoken word, what they threaten that they're going to do. And half the time they don't ever follow through. So there you go. That's my prognostication. This market is going down, and it's going to go down with pain. Clubber Lang pain. Pity the fool. Well, actually, that's like a Mr. T. Is that a Mr. T thing? Did Clubber Lang ever say pity the fool? I don't remember. That was a long time ago. All right. I'm done. I want to thank everybody for showing up today. Sorry, but this is going to go down as a no trade. Yeah, I'm pretty sure that pity the fool was only a Mr. T slang. So, but anyways, I know that Clubber Lang was all about pain. Yeah. Thanks for chiding in, and 123 Happy Street, showing your age. Bobby Smith wants to know, when do you think the market will hit its low? Oh, that's a horrible question. That's an unanswerable question. It really is. It's just totally unanswerable. When is the market going to hit its low? That really depends on what kind of bottom we have, right? So there's basically three different types of bottoms. You have the V bottom that we all love that comes down and then goes straight back up. And, once that V has been placed, then you can say, hey, that's the bottom. There's the U bottom where we kind of do sort of an extended V. And once we're up and we hit some level, you never know what the bottom is until you've started to come up. Then we can see where that is. But then there's the most horrific of all type of bottoms, and that's the L bottom. Goes down like this and then over. Right? And then slowly comes up. You won't know what the bottom is there for months, maybe years. So, where is the bottom? I have no idea. It doesn't matter. I think that we need to reduce enough of the market. Enough of it has to come down so that we have fair valuations. What is that? I don't know. Does that mean $9 trillion? I think that's what it means. I think that the Fed needs to unwind $9 trillion. $9 trillion. Now, what does that equate to the bottom? I really don't know. It's down there, though. I'm going to guess, I'm going to say 50% down from here. Not from the top. I'm talking about from here. What's 324 next Tuesday? Did I miss something? Am I missing the joke? All right. So there you go. We'll be back tomorrow, same time. All right. So let's recap what we did today. We talked about how this service evolved, where it came from. We talked about why this style of trading is 30 times more efficient, capital efficient. 30 times more capital efficient. We talked about then we did an errant trade that was a dumbass move and threw away $60. There goes like a good, nice lunch and maybe a couple of drinks. Then we talked about the result of the Powell speech and why the market had come down, and we dissected the narrative and how the market is interpreting that narrative and where we're at right now and why we're going down. And I'm pretty sure that that's what's happening here. So I expect more downside. And but again, for us as zero-DTE traders, doesn't matter because we only look at small slices of time, and we use that premium decay on our side, volume profile, and asymmetric risk to reward. All of those are an unbeatable combination. And so we'll see you tomorrow, and we'll try this again. Peace to you all. Now it's music time.